Hello traders, welcome back to the Forex gig, and in today's video we are going to be exploring the long black candle, a powerful candlestick pattern that can significantly impact your trading decision. This pattern often signals strong bearish sentiment in the market, but its implication can vary depending on the context of the market. Understanding how to interpret and trade the long black candle can enhance your technical analysis skills and potentially improve your trading outcome. So in this video, we will cover its characteristics and practical applications in various market conditions. By the end of this video, you would have a comprehensive understanding of how to identify and utilize this pattern in your trading strategy. So stay tuned to learn how this single candlestick pattern can prove valuable insight in potential trading movements. Now we start by understanding what the long black candlestick is all about. The long black candle represents a bearish price movement where selling pressure dominates the entire trading section. This candlestick forms when the open price is significantly higher than the closing price, creating a long black or red body. The length of the candle body typically measures at least 3 times the average of a previous candle, making it stand out on your chart. This is exactly what we are looking at as a pattern. The distinct feature of this pattern lies in its shadow or wick. The upper and lower body shadow remains noticeably short compared to the body of the candle. This formation indicates that sellers maintain control throughout the section, pushing price steadily lower with minimal resistance from buyers. This is an example of this long black candle. This is a typical example of this candle. Both upper and lower body wicks remain noticeable. When analyzing this pattern, pay particular attention to the location on the chart. A long black candle appears near major resistance level after an extended uptrend carries more significance than one forming in a sideways moving market. That means the one forming in an uptrend will significantly be more valuable than the one forming in a sideways moving market. The pattern strength increases when accompanied by above average trading volume, as this confirms strong selling pressure. As we can see from this example over here, we can see the abnormal trading volume on this chart. This is the abnormal trading volume of this particular candle. We can see it here, showing that it is a confirmed pattern we are looking at in the present chart. However, extremely long candles might suggest an oversold condition, so you need to be very careful to consider entering trades. Let's see how we can apply this strategy. First of all, the long black candle serves as a versatile trading tool, offering insights inside or into the potential market reversal and trend continuation. When trading this pattern focus on its position within the broader market structure and supporting technical analysis. Supporting technical elements. Let's see how we can apply this in a bearish continuation. Applying this in a bearish continuation, the long black candle often confirms bearish momentum. Look for this pattern forming after a small retracement or consolidation or a consolidation period. This is when it happens. You can see this pattern over here. This pattern is over here. This is a bearish continuation trade, and we can see we have already confirmed that the market is in a bearish direction at this moment. So taking this continuation trade, all we need to do is wait for it to react from the current resistance level, the current support turn resistance level. When we see our pattern, we know that yes, it confirmed there is a strong bearish pressure in the market, confirmed by the volume at that particular area on the chart. Let's see how we can confirm this signal in a reversal signal for an uptrend, where we can confirm this in an uptrend for a reversal signal. This is exactly where we can confirm it for a reversal in an established downtrend, in an established uptrend. When this pattern appears during an uptrend, particularly at a resistance level, it can signal a potential trend reversal. The longer the candle, the stronger the reversal signal. Now let's see how we can enter and exit this trade. For short positions, enter when the candle close and place your stop loss above the candle high. So if we are to take this trade, we just enter immediately the candle close, put our stop loss just above the candle high. Our target profits at major support level. We can target at major support level, or we can target 1:2 minimum. Let us remember that we always need to confirm using our volume. We have to confirm high trading volume accompanied by this signal, by this candlestick pattern. You have to look for the volume at least 50% above the average of the previous 5 candles. So as we can see from this candle volume, we can see how it reacted at this area. We just need to check the previous 5 candle bars, previous 5 volume bars, to see if this particular volume exceeds the previous 5 volume bars. It shows that yes, there is a lot of bearish momentum in the market. This is how to confirm your strategy with the volume indicator as a stronger confluence for taking your trade. Alright traders, we have come to the end of this video. If you found this video analysis valuable, make sure to hit the like button and subscribe to the channel, and turn on the notification bell to stay updated with more forex trading insight. Until next time, smart trading and manage your risks properly. Goodbye.